60% of economists forecast a recession. And when everyone's on one side, I get very wary. I think there might be some really surprises next year. Now, let me tell you, 2022 was marked by very good job growth and very poor GDP growth and very poor productivity growth. Firms were hoarding workers because they worried they couldn't get them. I think we may see the opposite next year. I think we might see actually the job market loosen up dramatically, even job losses, but that GDP grows much faster than most people think. And we have a chance, if the Fed pivots, to really avoid a recession and have a good year for profits. Because if productivity comes back, that puts downward pressure on prices, it puts upward pressure on margins. And everyone who says, oh my goodness, these 2023 estimates are way too high, might be surprised that many of them might turn out to be what profits are going to be. Let's go to the housing sector, up 0.7%. That is totally ridiculous. Housing prices by every indicator are going down, not up. Even rentals, yes, they're going up from contracts, they're going up from a year ago. But talk to the people on it, they said, I can't get the jumps that I got earlier this year. That should be minus 0.7%, which, by the way, wipes out core inflation for September. Let me give you a really interesting fact. The distorted way the government does housing statistics. From March of 2020, the beginning of the pandemic, until this summer when the housing market peaked, all the best housing indicators, Case-Shiller, the government indicators, housing was up 40%. What do you think the CPI housing factor was up? 11%. Because of the lagged way it put the rising prices in. What does this mean? We had so much more inflation over the last year and a half because of the inflation wasn't in that housing sector. And now when the housing is going down, and by the way, I expect housing prices fall 10 and 15%, and the housing prices are accelerating on the downside. Will you see that housing sector in the core negative next month or the month after that or the month after that? No, you'll continue to see that positive. It's imperative that the Fed recognizes that is not an indicator of what the real rate of inflation is. And a second really important point, and when did the Fed start tightening? In March. Is that supposed to work in 6 months? Look at the Fed exploded the money supply in 2020, the year of the pandemic, by more than any other year in the last 150 years. Did we have inflation in 2020? No. Did we have inflation in the first half of 2021? No. Then we started in the second half, and the Fed said it was temporary, so it didn't do anything until the March of this year. All right. So monetary policy, we started tightening in March. Are we supposed to see that in the core now? No. What do you see the tightening of the monetary policy in? Just like what did you see the loosening of the monetary policy 2 years ago in? You see it in the housing market, you see it in the financial market, and you see it in the commodity market. All of those exploded in 2020, which showed you that inflation was definitely there and going to go into the official statistics. What have happened to those three markets? They've gone down. When will it get into the core? Months, if not years down the line. The Fed waits for the core to get down to 2% year over year. It'll drive the economy into a depression. Totally wrong. I'm not at all surprised by the number because the number is ridiculous. It has no meaning to what the actual rate of inflation is. In the housing, which is almost 50% of the core rate. In the year ago meeting, only 2 people thought that the funds rate should be above 1% this month. It's interesting. Only 2 people thought that the funds rate next December should be below 5%. I think that they're going to be exactly wrong in the opposite direction. They were way too loose before. Funds rate had to rise a lot, and now they're way too tight. Very disappointed in Powell and his reasoning and his justifications for this overly tight policy. First of all, he acknowledged that the housing data is lagged, that housing prices are actually going down, but we're not going to see it until the middle of next year. So we're going to wait until the middle of next year before we, decide whether we need to pause the rate hikes. Look, even though we know it right today, I think we've got to get out of this, year over year look at inflation. Remember, when we get year over year, we're getting 11 months of old data, outdated data, only 1 month of new data. And in fact, that 1 month contains data that he admits, particularly in the housing sector, is extremely lagged. The Fed has to be forward-looking. Let's go to the wage part, because I think that's really interesting. He said, okay, so we have this housing, but wages is a problem. First of all, wages have gone up less than inflation. Steve mentioned that last month was one of the very few months where wages actually ticked a bit above inflation. But over this whole pandemic period, wages have fallen short of inflation. It's hard to understand that is an inflationary force. But more important, he brought it up something new. He said there may be a structural shift of a reduction in labor supply. Well, what does economics say? If there's something that is a reduction in supply, you've got to let its price rise. That's economics 101. You can't suppress structural shifts. The Fed is not supposed to act on structural shifts on supply side problems. A year and a half ago, Chairman Powell said, we're not going to act against inflation because there's supply side problems. Now he's saying, there's supply side problems in the labor market that may raise wages, and we have to crush the wages in order to stop inflation. They're totally inconsistent as a part of monetary policy. September 2021 meeting, where they said, we're not raising rates in 2022. They were very, very firm on that. Inflation was transient and it would be a mistake to raise rates. Why should everyone believe the Fed? When, in fact, the Fed has not done anything that they told us that they were going to do over the last 18 months. Now, I think when this data comes in, we take a look. We talk so much about what's going on in prices. I think the Fed is finally getting it that its housing indicator is way lagged and that house prices are actually going down. And once you put in actual house prices in those inflation numbers, as I said 2 months ago, really inflation disappears.